It's really clear that the pound is pricing in a lot of event premium, a lot of risk around the Brexit deadline, but it honestly seems like stocks are living on a completely different planet. So let me take you into the charts to show how this divide is playing out. Now, for one, the pound cable is getting weaker, which is in the blue, but I want you to look at what's happened recently. This is the ratio of domestic stocks to the FTSE 100, and typically the FTSE 100, it's going to follow this pretty well because those exporters, those big international stocks do better when the pound is underperforming. But instead, we're seeing domestic stocks outperform, which usually shouldn't happen. So that's what we're seeing when we see this divide at the end of this chart. Now, some analysts say that this is essentially stocks already pricing in Brexit, but this is also happening below the surface. So these two lines here, this is the term premium for the pound. So essentially, the term premium tells us how options are pricing the pound at different times. So having a little trouble keeping this chart up, but I want you to concentrate on this bottom line here because this is the current term premium for the pound. So this is options that expire 2 weeks out, 1 month, 3 months. You'll notice at 3 months that this line jumps up. That's investors wanting more protection 3 months out, which is that Brexit deadline. Now, the line I have at the top of the chart is actually the same time period before the Brexit referendum, showing us that the pound is pricing in the same risk that it was back in 2016.